What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips, specifically the Direxion Daily Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol of SOXL. My name is Chris, and I'll be taking you through my thoughts again today. If you're new, welcome. If you're returning visitor, thank you for coming back. Today is Tuesday, July 1st, so we have started the new quarter, the new month. It is the second day of the week, so didn't get the trifecta of the new month, new quarter, and new week falling on the same day, but close enough. Anyway, today's action was pretty much what we were looking for, what we were calling for yesterday. Um, it didn't finish as well as I would have liked it to, but we can see. Remember yesterday? Let's go to the day chart. Remember that yesterday we had the inside day, and my second favorite combo after the 3-2-2 is the 1-2-2 combo. So we got the one and we got the failed two down, meaning it went two down but failed to remain down. It not only hammered up, but it turned green. So we pushed back above the open and closed above the open. Um, it almost set up perfectly for the 1-2-2. I probably would have bought some swing trades overnight to the upside if we would have finished stronger, but we do have this wick on the day. And as we get into the lower time frames, we can see how the end of the day finished. And then let's see, after hours we're up about 15 cents. So nothing huge up or down. So we can't really tell from at least after hours right now. We'll probably have to wait till the morning to get a better idea of how we're gonna open up. But let's go ahead and look at those smaller time frames or the shorter time frame, and we can see that in the beginning of the day we opened, shot up, but where it was rejected. Again, coming into play is that 1 hour downtrend line from Thursday that we drew. Not saying that that's exactly what it rejected off of. When we get into my shorter time frame trade charts, we'll see. We'll get an idea of what horizontal levels were there. But even without having to see any Fibonacci's or anything like that, you can just see that this area right here was an area of support and resistance. So not surprised that it rejected here. It's still hung around the opening print. Again, this marker here, this price level 1, is what I use as my opening print. I just make a quick mark at the beginning of the day as soon as things open up. And but then we quickly failed and went 1-3 rev strat. So that's a pretty big strat indicator to indicate that we should have more push to the downside. I did buy a couple puts around this time frame and did get some of this action to the downside. Left my stop a little too generous, so I let some of that profit get eaten up a little bit, but we still got good profit. Um, then we got this huge bounce, and what were we talking about yesterday? A push down to possibly last year's low, which is this white dotted line here, 2350. We've had this out here since the beginning of the year, and what does it do? It comes down and bounces off of that. Um, it, it was below opening print, so I personally did not get in on any calls to the upside at this particular time. It just was going against buying a call at that time would go against my rules that I have for scalping and day trading. And I wasn't mad at the bounce because we've got the longer swings for September, November, and January 26 and January 27. So any movement back to the upside is welcome. But we can see that it did come back up, and the 1 hour downtrend line that we drew from Friday to yesterday's high came into play here. It's where we found some more resistance. I did draw in this 1 hour downtrend line um, as well, so it was kind of more information that this was a resistance zone. Again, with just looking across here, we see it's support resistance on a more micro time frame, and we kind of played around there and ended up rejecting essentially, going down, getting three candles in a row. So a lot of indecision really on the end of the day, but we did still close above the opening print, meaning the candle was green, and we are set up in what looks like it could be a 1-2 down, 2 up situation on the day chart, which again I was hoping that we might get. Looks like that's, I don't know. I don't want to say that's what we're going to get tomorrow. I don't like to get ahead of myself, but we'll see again in the morning where things look like they're going to open up. There are ADP non-farm employment change numbers being released tomorrow morning, so that could be a catalyst to the upside to trigger that 1-2 down, 2 up. So we will be looking for that tomorrow, but again, we can make a play either way, which if it wants to go up, if it wants to go down, we'll make a play based off of our rules and our risk to reward scenarios. We enter we if it looks like it would be profitable. So whichever way we go, if we don't go 1-2 down, 2 up tomorrow, if we end up going 2 down again, that's fine. We'll go ahead and buy puts and make some money that way. From the hour time frame, again, we made a lower high. We did make a higher low at this point, so it was just consolidating. Again, we had that triangle drawn. We'll see it on the shorter trading time frame charts, but it ended up dropping out of that little triangle that there was pretty quickly and pretty violently in the morning. So we did get a huge hammer. It was still red, and it was right at opening print. It was also following, or it was the lower low following a lower high. So I personally didn't feel 100% confident in entering a trade right here. I also had an appointment at 10 o'clock. I've got a little leak in the guest bathroom, so I had a plumber that arrived at 10, so I knew I wasn't going to be able to just sit here and watch and babysit an entry that I got in with no real confidence. So I just stayed out. No trade is better than losing money, and yeah, I missed some upside, but again, I've got those swings, so those were just clocking back up to the upside themselves. So I wasn't worried about missing out on any action. Yeah, it would have been nice to get in on it, but it's fine not getting it. You see that we did get, I believe this was a lower high, but it's about an equal high. 25.19 was that high. 25.17, yeah. So it was technically a lower high by 2 cents, but we can call it an equal high. Either way, it did make the equal high by this 2 down, going 2 down. It locked in that equal high, and we stayed inside on the hour, so we still don't have any idea of whether we're going to make this a higher low and go push higher, or if we're going to go ahead and push lower, possibly make it a higher low somewhere further down in this area, or just take us to the bottom of this expected move for the week, which is this purple box, and test last week's 50% line. Again, like I've said in the past, we like to see the test of the 50% line, especially if you get the bounce off of that. That shows to me good strength in the market, that it was just a needed pullback. We've been talking for a while now about how we pushed pretty much all of last week, and we could expect a pullback and would gladly take one as well. So we're getting what we wanted. If we look at the 4 hour, this is what doesn't make me quite as confident in the 1-2 down, 2 up kicking in tomorrow, because you can see we got a lower low. So on the 4 hour, we got a lower high, lower low. So we're definitely in a downtrend. We can actually just draw that one in here if we want. What's this one? Yeah, so we'll just mark it right there. So we're in a downtrend, and we haven't broken the high of this lower candle. This was a hammer, and it was green. So although it was a lower low on the 4 hour time frame, it does have a little bit of bullishness to it, and just the fact that it's a green hammer. So it tried pushing down, that got pushed back up. Not only did it get pushed back up, but it went past the opening print to flip it back green. And the red one afterwards doesn't really give us much for tomorrow. So we'll have to kind of watch. I'll probably be a little bit lighter again tomorrow, because frankly, with this one on the 4 hour, we have to watch out for a 1 2 up 2 down, or a 1 2 down 2 up. We don't want to pile in too soon, especially if it goes 2 up, because there's not a lot of magnitude here for it to complete the 2 up before it could come back down. Not only could it go 1 2 up 2 down, it could go 1 just red 3. So we could pop up for the 2 up and then just immediately continue to go down. So I'm not going to get in too heavy tomorrow, too early, until I see what's happening on the day chart. The 4 hour is still a little, it's undecided in my personal opinion. So that's the way I'm kind of seeing how things went. We can go ahead and go into our scalp and day trade charts and make sure that they're marked up right. I kind of keep up with the 15-minute throughout the day, the broadenings, as I can. Again, I was a little bit busier today, but I was able to move some and get them in this after. What time was it? Yeah, about noon. I got to put these in. So we no longer really have this, I guess we can leave that out there, and we'll remove this uptrend line, and we'll go ahead and draw in high low, this 15-minute broadening. Okay, we'll remove this, because these are mini 15-minute periods back. So go ahead and get rid of that. Did have this uptrend line. I'm not even going to put that in there. Even though this is a scalp chart, it's still just too much for me. So we went up, down, down. So we do have this 15-minute broadening here. All right. So we'll leave those drawn in. Let's go to the hour. And we can see, what do we got here? Oops. Let's take this one, since it's from a couple periods ago. Okay, so that shows us, if we're back up here at open, you can see this downtrend line isn't as angled anymore. So it looks like it might be, getting a little bullish. Again, we don't want to jump the gun. We'll leave this one from Thursday here, just because it's still in play with where we closed, and it's been in play since Thursday, so no need to remove it. This one pretty much comes into play with the one of Thursday, so we'll remove this one. Let's see what that looks like. Actually, we'll leave it here, just to leave it here, since it never really cleared it. Let's see, on the 1 hour, we don't have an uptrend line. We've got this broadening formation. We can remove this one. That's from plenty of periods ago. Let's remove this one as well. All right, that cleans it up a little bit. Let's get into the 4 hour. So we've got our broadening there. Let's let's get our downtrend line drawn in here. Again, it does look a little sloppy from a little zoomed out position, but once you're in there on 15 and 5-minute charts for a scalp, it all makes sense. So, do we want to remove that uptrend line? We probably do, because it's in a downtrend and it's really broken through it. Let's see, remove that. Okay. Again, sorry guys, just live thoughts. Thanks for following with me. No real production here. I'm not going to edit it. I'm just putting out what I see. This is the day, so we've already got one off of there. Yeah, we're good. So let's go to our hour, get into our day trade chart. We'll take this one, put it over here. Alright. And actually this should be like this. So we are below it. Let's go back to our scalp position. No, we had that right. That was right. Okay. Let's get back to the day trade chart. Okay. Let's get this moved here. Alright, we're good from the hour perspective. Let's get in on the 4 hour. Draw a downtrend line there. Okay. Alright, and just like that, we're done. So now what we need to, oops, that wasn't good. Alright. We just need to move the day trade marks for previous day's high, previous day's low, overnight high. And I also put in the 4-hour triggers as well to help me gauge where 4-hour triggers are still, points of interest. They're considered somewhat inflection points, and so we still want to know where those are at. They also give us magnitudes for the 4-hour just off the visual, so we don't have to go look at our notes. Alright, so we've got those drawn. And again, it's a little bit of movement with the mouse, but it only takes about 2 minutes to get all of this done. And the amount of confidence it can give you when you're just looking at a chart. I don't particularly trade off of charts on my phone. I like to be in front of the computer, but it makes it easy enough that if you wanted to, you could trade off your phone. I'm not going to suggest it, I don't know how up to, fast your network is that you're on as far as your phone, but you could be getting bad prices, so, yeah, not much to it, guys. Let's see, let's look at the month, how the month has started out. Since it is the beginning of a new month, we're inside, but, we're following this bounce, which looks like it was a low here. We did have somewhat of an inverted hammer, but was a green candle, and then we just pushed last month. So we'll see if we slow down a little bit. We talked about all of the points of interest as far as like resistance is concerned, but we've also talked about how we're very close to flipping the year back green. We are back up inside this 3, so we're looking to target the top of there. we've got some good things going in our favor, but again, we have been pushing, so the pullback would not be expected. I mean, unexpected if we got it. Um, if we look at the week here, again, big week last week. Got a 1 here, a red 1. It is a hammer though, so a lot of times a high 1 and after a 3 is bullish. So we could, even if we end this week as a 1 in this same structure that we're in right now, it could be considered bullish. So, but it also could be a possible 1, 2 up, 2 down next week. If this does go 2 up and possibly fail by the end of the week, or just even if it doesn't fail, we still have the 3, 2 up, possibly 2 down next week. That could be on the table with a pretty big magnitude down here to this bottom of this 3, with the gap as a magnet pulling us down. So we want to watch this 2350 level, which was last year's low. It's going to be a big support point for us, and we can just see over time how that level. Let me just get a line out. This 2350 level. It's been a point of contention here, support resistance for a while. So let's get back on this day, because I do still like how the day looks. Swing. Oops, let's get out of that swing, because we can see here we've got the 1 green 2 down, wicking off of last year's low. We're looking good to possibly get the 2 up. Now there's not a whole lot of magnitude here. The magnitude would be the top of this 3, which is 2584. But if we can exceed that and start pushing up and start testing this monthly downtrend line, that's just getting us that much closer to possibly flipping the year green. So it's going to be kind of a fight in this level, or in this area. As you can see, it was a fight before. Look at all this chop. All the chop there. Had chop here, chop there. So there's going to be some fighting up in here. But if we can get through it and to the upside, remember we are targeting like that 35 area, 33 at the least, to make this higher high. But from the day perspective, I'm going to be looking for, we got to watch the 4 hour, but if we can trigger a 2 up on the day, we've at least got a target here with some magnitude to look for. Not as much as I would like, but it gives us something to look at intraday to try and play, because again, we've got our long swings. We're just trying to make any additional money day to day on the side, outside of those long-term swings, and all that is just cherry on the top, because the long-term swings we bought at the lows April 7th. We waited very patiently for those lows, and we deployed a good amount of capital then. So I've already actually rolled a couple of contracts, up over 500-600% on a couple of others on my 2027 contracts. So again, just this day trading, I don't want to take it too seriously. If you want to go heavier and use more capital and buy more contracts, or make plays maybe deeper in the money, if you're somebody who usually plays more out of the money. I personally like to play right at the money, or one strike in the money. Those to me have the best movement, and especially, we're talking about for short-term trades. But yeah, we've got some good things to look at today, and I'm really looking forward to the rest of the week, seeing what some of these economic numbers have to for us. Remember, Thursday is only a half day trading, and Friday we have off for the holiday. So shortened week. Just stay on your toes, stay nimble. That's why personally I'm staying light in the amount of contracts I'm buying right now. But again, playing out how we would want it to play out. We're not saying that we knew that it was going to play out this way, but we did want it to play out this way, and we were fortunate enough that it was. So, or it is playing out this way. So Thanks for joining me again today. If you like today's episode, let me know by giving me a thumbs up. Go ahead and subscribe if you haven't. If you've got any constructive criticism, please let me know in the comments. I'm always open for improvement, but again, remember this is just my thoughts live. I don't have any production. I don't. You're not gonna see any editing. There's no cuts in my video. It's just one straight video, one take. I don't practice anything that I say or write down anything that I say. I'm just giving you my thoughts live and a rundown of how things went for me in that day. So again, thanks for joining me on Bullish Chips. Hit the like button, comment, subscribe, do all that YouTube stuff. Have a good night and have a good day trading tomorrow.